What's up YouTube, it's your boy OMG Pips. Today I'm bringing you guys a video that illustrates how I trade one of ICT's best trading setups that I use to find high probability entries and make good profit. Right, so without much further ado, I'm gonna get straight into it. So the first thing I do is I start my analysis from the weekly time frame just to see what price is telling me, just to see what's happening. You hear me? So right off the bat, the first thing I do is I mark the highest high in sight, which is this one. That's the highest high in sight and the lowest low in sight as well. Cool. Right off the bat, I know what to pay attention to. I know what to look for, right? Type shit. So once I've marked these two levels, I move into the inner swing levels. So first things first, I mark the outer swing levels. The second thing, I mark the inner swing levels. Right, once I'm done with that, I go even deeper. So this is what it looks like when I'm zoomed out like that. Once I have marked this, I see my most recent swings are this one, and this one. 1, 2, 3, 4. Right, what did I tell you? This is a downtrend in it, which means the next move is going to be something somewhere here. Then let me do that somewhere there, then proceed down type shit. Can you see that we have this break right here? We finna have another break right here. So right off the bat on the weekly, I know I am to expect bearish momentum probably to this level, because this is a swing low that has sell side liquidity underneath it, right? So sell side liquidity, this is sell side liquidity, that's buy side liquidity. So I know price is aiming to come to this level since we have been trickling downwards. Cool, let's zoom in even further. So once I know that I'm looking for a bearish entry, I start looking for my confirmations, if I may say. So the first confirmation I see is this break of market structure right here, break of structure. So I'll mark that break of structure, and when I look inside here, I need to find a PDRA which is suitable for me to go short on. The two things that I look for usually are an order block or a fair value gap. If I don't see an order block, then I look for a fair value gap. If I don't see a fair value gap, then I look for an order block. And in this case, I can see, if you look at this move from here to down here, there's no fair value gap in here, right? But there is an order block right here. This is an order block. So I mark that, and we can see we have mitigated that level already. Today's Saturday, right? The trading week that closed on Friday, this was the closing candle, and price mitigated this order block, which is telling me it might be ready to start dropping. We might see price on the coming week, we might see price opening here, creating a Judas swing and then crashing. But if it doesn't reverse from this level, if this candle isn't the last bullish candle, then I also have another order block to look at, which is this one right here. That's my second entry. My first entry, if price doesn't go short from here, then I'm looking at it going short from here. So once I've established that on the weekly, I go down to the daily time frame. Okay, cool. So we're on the daily time frame, right? This is the first order block, that is the second order block. On the daily time frame, if we look at price, you see it has been moving from here, going all the way down to here, then it started going up again, right? So if we look from here to that level, I said I always look for a fair value gap, or if I don't see a fair value gap, then I look for order blocks, right? So we'll start from this, from here. We have a fair value gap right here, but it got mitigated by this candle, and also price came back to mitigate that order block. We had another fair value gap right here, it also got mitigated. Price came back again to mitigate that order block. Then we had this break of market structure right here. We had that break of market structure, and if you can see, if you look closely, you're going to see we have this fair value gap in here. This fair value gap has the weekly order block inside it. So once I see this is more confirmation to me that price is going to crash, right? And besides this being a fair value gap, We also have an order block in here, which also got mitigated already. That gives me more reason to trust in the bearish bias. So once we have established that on the daily, we go down to the 4-hour. And on the 4-hour, you can see we have a fair value gap right here. We have a fair value gap right on the 4-hour, which price came to mitigate. And if you can see, we mitigated the fair value gap, and the next candle shut down. So once I see this, I know for a fact, not for a fact, but I know, I am 90% sure we're going to see bearish momentum in the next coming weeks, at least the next coming week, but even further until price takes out this sell side liquidity. Until price takes out that sell side liquidity, I have a bearish bias. You hear me? So that is what I'm looking at. And when I see this on the 4-hour that we have mitigated this fair value gap, my next move is to go down to the 1-hour and look for a change in market structure right here. So we can see even on the 1-hour, there's a fair value gap in here, which also is aligned with the 4-hour fair value gap. We have a 1-hour fair value gap in there. There isn't much information on the 1-hour, so we're going to go down to the 15-minute. On the 15-minute, all I'm going to wait for is a break of market structure. Once I get a break of market structure, then I know that is a green light for me to go short. And that break of market structure that I'm talking about, I could use this one, but this one isn't as strong as this one. Once we get a break of market structure on this swing low, once price breaks this level, then it's confirmed that we are heading down. So be on the lookout for that. Once it's confirmed that once this level breaks, then it's confirmed that price is officially heading down. Price is officially crashing. You hear me? Once we break this level, it's officially confirmed. But I'm willing to enter once this level is confirmed as well, just so I can get much tighter entry type. So what my entry would look like would be something like this. Once we break this level, once price breaks that level, I'd look for an FVG in here. I'd look for an FVG in there, then put my entry right on the FVG and put my stop loss right above this high, the most recent high, then put my TP right there. And if you look at this is a 1-to-16 setup. Once price breaks this level, then I'm going to look for an entry, and once it breaks this level, then it's confirmed that we are going to be bearish for a while. All right, so yeah, that is a simple yet very effective way to find high probability setups. If you happen to have missed something, make sure to go back and watch this video a couple of times, just so you can understand what is being said, what has been taught, what has been mentioned. So if we put our stop loss above this high, our TP, our risk to reward will be 1 to 7% profit. If we put our stop loss above that level, then it's a 1 to 2, 1 to 3 type trade. So that is the reason why I can't just execute right now, because our stop loss is too big. That's why we have to wait for a change in market structure on the 15-minute time frame and find a tighter entry to go short. It's your boy OMG Pips signing out.
And remember, in Forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.